those are the headlines that we're tracking for you today on Startup Street. Now, in what's brewing, personal care brand Bombay Shaving Company has raised 136 crore rupees in a fresh round that was led by Sixth Sense Ventures, with participation from its founder and CEO Shantanukd and others. Now, this round includes both primary and secondary infusions. The company, which recently achieved profitability and doubled its growth over FY25 to an annual revenue run rate of more than 550 crore rupees, says this fundraise is a strategic step as it prepares to go public. With this, the company aims to expand its omni-channel presence, deepen the retail reach, and invest in capabilities and brand building across high-growth segments in India's evolving beauty and grooming market. For more on the company's growth and trajectory ahead, joining me now is Deepak Gupta, the co-founder and COO of Bombay Shaving Company. Deepak, thanks very much for your time here and welcome back on the show. Start by telling us about this 136 crore fundraise you've done and how you plan to allocate this capital and the kind of investments that you believe will drive the next leap of growth for Bombay Shaving Company.
Thank you. Thanks for inviting us. I think Bombay Shaving Company and Bombay, which are our two brands, are built with a philosophy of delivering great products at an intersection of aspiration and value to young Indian consumers. And we have just in October completed 10 years of our journey. And we believe that the current fundraise is kind of testimony to our focus on continue to drive predictable growth, also bring in disruptive innovations, basis deep insights to on the Indian consumers, both men and women, and also to kind of build brands that last for centuries.
Yeah.
We believe that the current fundraise will help us to kind of drive the next phase of growth as we kind of expand profitability further and drive the distribution.
Well, Deepak, congratulations on the 10 years, firstly, and let's get into that. I mean, you claim the company has achieved profitability and a net revenue run rate of more than 550 crore rupees. Can you sustain and improve on this performance from here on? And what will the next few years look like in terms of top line and bottom line growth?
Yes, definitely. We believe that a good thing about FMCG businesses, especially we are brands built on a digital native consumers. If we continue to kind of stay closer to the consumers and keep innovating for the Indian consumers, our ability to kind of deliver delight and then also drive growth as well as expand profitability should not be a problem in the near future. We are basically looking to get to 100 crore per month, which is like 1,000 to 1,200 crore annualized run rate over next 10 to 12 quarters. I think that's the journey we undertake with expanding our profitability to close to another 100 crore EBITDA for that year. So I think that's the 10 to 12 quarter projection we have taken for ourselves. Yeah.
So you're almost talking about doubling your top line in the next 10 to 12 quarters. You're also setting sights on a public listing, Deepak. How much runway does the new fundraise give you before you have to go public? And what can you tell us about the timing and the milestones for this IPO?
Like I said, I think we turned profitable a few quarters back at EBITDA and PAT level, and we have also generated positive cash for the first 6 months of this financial year. So from that perspective, actually, this fundraise will accelerate our growth for the next phase. So this is for acceleration, not for survival. So I think runway is not a challenge. How do we deploy this fund around manufacturing, product innovation, and deepening our distribution will enable the next phase of growth. And like if we deliver all these three, which is predictable growth, continue to expand our profitability, like I mentioned, and also do disruptive innovations for the Indian consumer, which we believe that there's a lot of white space to do that. We don't see we kind of IPO should happen naturally, or at least we should be IPO ready over next 8 to 10 quarters. Yeah.
Okay, 8 to 10 quarters before you have to go public. A quick word on your ambitions for the women's care category. Now, that is deeply competitive. Do you see that as a major growth engine for the company in future? And how do you plan to scale Bombay, different products, marketing, distribution strategy compared to what you're doing for the men's grooming side?
Actually, very interesting. Women categories are actually much deeper compared to men's grooming and personal care category. Like in our space, which is do-it-yourself salon at home. That's where we position Bombay for hair removal for women or even styling for women. The category is very deep. It's actually more than 20,000 crore category sitting between services and products. So we believe that there is that will accelerate our next phase of growth significantly from Bombay as a brand. Bombay is already 100 crore ARR brand in less than 3.5 years of launch. So we see now with the fresh capital raise, our ability to kind of invest in both brand and the innovation will significantly increase, and that will further accelerate our growth from Bombay.
All right, big plans for the women's segment, but this omni-channel expansion plans. Maybe Deepak first tell us how you're seeing consumer behavior shift in the D2C space, and how will that influence this strategy in terms of the markets you're eyeing and how much you want to grow your offline presence.
I think there are 2-3 undercurrents which we have seen. One is consumer, I think, don't want to buy from legacy brands. They want to buy from the brands they can relate to, and we do it. We have done it beautifully so far with kind of content, one-on-one marketing to the consumers, with a lot of disruptive marketing we do beyond traditional marketing. Second is I think a lot of consumers have started investing in self-care, wellness a lot. So a lot of our future innovations are kind of solving for those consumer needs. And third is we have a large D2C engine, where we are able to kind of not only kind of engage with the consumer, but also kind of build a significant lifetime value with the consumer compared to transacting on other channels. So I think that become a significant strength for us. Aided by that is quick commerce, which kind of has expedited our journey of getting deeper to consumers in tier 1, tier 2 cities. For example, now quick commerce is already into 200 cities. So that has kind of further expedited our deeper journey. Apart from that, we are present across all the major modern trade in the country, and the next phase of growth will obviously come from modern trade and general trade over the next few quarters.
Okay, all right. All right, Deepak, thanks very much for sharing that with us. We've run out of time, but it's been a pleasure having you on the show. Thanks very much.
Thank you. Lovely speaking to you.
All right, moving